buyers to get the possibility of buying their first home with, obviously the lending part. Lending is something that that I carry in my veins as far as numbers. I have a CPA degree in Argentina, where I was born, before I came to this country. But essentially, when we talk about lending, there is a different type of lending. Like I said, I was doing residential mortgages. That is lending as well. This time, we're focusing on business lending. And you may say, well, why only business? Well, we all know through this many years after the 2007 market crash, a lot of people decided that they decided to go in business for themselves. Even after COVID or during COVID, people decided that it was a good opportunity to give themselves a chance to become entrepreneurs and start working from home, and obviously with a business that they like, instead of having a job on a company that they perhaps don't feel the closeness as far as where their interests are. And they start their small businesses. But one thing about small businesses and the startup of the small businesses is the fact that we need capital. In every business that we start, and even after we start, we need capital. We need capital for many reasons: to buy equipment, have a line of credit, make the payroll. We need capital to wait until we get paid. If we have to invoice a company that will get paid in 90 days, we need capital to wait for those 90 days. There's many reasons about capital, and we're trying to address right now, at this time, I'm trying to address all of these small and medium size entrepreneurs, business people, that they're looking for capital. Now, there is two kinds of capital right now in the market: the conventional, traditional capital, when you go to a bank or a credit union and you ask for a loan, and most of the time you have to put collateral, and that collateral, 9 out of 10 is perhaps your home, where the bank, obviously, depending on the risk, they request for you to put a collateral. Then there is another type of funding and capital out there, which is the non-traditional. These are lenders that they put together programs for entrepreneurs where there is no guarantees on those loans. Those loans are based only on a few factors. Number one, your ability to be an entrepreneur, your time that you have been an entrepreneur, and by looking at your bank statements, make sure that your business is making money. And how do they do that? Well, very simple. Normally what they request is 6 months worth of bank statements, where they can see exactly if the business is making money, how much money comes in every month, not actually what is left after the expenses. It's just the gross money coming in, the deposits. And then based on that, obviously, you have to have some sort of decent credit that, show anybody that you're paying your bills, especially your business bills. And then they determine how much can they fund you. But the funding is subject to the business, is not subject to your home or any type of personal guarantee whatsoever. That's what we call non-traditional. So we are in the non-traditional financing, non-traditional lending, with short-term loans, long-term loans, lines of credit, obviously business financing, purchasing materials, purchasing equipment, accounts receivable, advances, and there's many of them that we're going to probably talk about during this podcast and the future podcast. So, who is this podcast for? Actually a question that I ask myself. I mean, when I try to do a podcast to get the word out to small and medium-sized businesses that they need capital. But again, if you're looking to grow your business, if you're looking to add another branch, you're looking to hire more people, you're looking to increase the product, increase the sales on your company, increase potentially getting a new infrastructure, getting vehicles, getting a fleet of vehicles for your business. Anything that it falls under the name of grow your business, you're going to need capital. You're definitely going to need capital, and that's what we're here for, to help ease the pain of looking for capital. Sometimes, and even as a business person, I felt many times in the past that I was just a number in the bank that I have my account. I thought that having an account or a checking account or a savings account in a bank was important. I came out to the realization that it's important for them because my money is there, but it wasn't important for when I need it, because I was never considered either because there were not loans back then for businesses, or because the banks and the credit unions are so conservative, and they don't want to take any risks whatsoever with anyone. It doesn't matter who you are. It doesn't matter how much money you got in the bank. And that's the word that it comes into my mind, is the risk. Those big banks, and we all know who they are. I'm not going to give names, obviously, but we all who they are. They're good to keep our money so we can write checks or deposit our pay stubs, or make deposits on the businesses. But when it comes to grow, when it comes into buying equipment, when it comes into short-term loans or cash flow loans, the sweet answer is like, we don't entertain that. It's not in the risk of our bank. It's not. We're not taking no chances. We don't have loans for small businesses. Whatever the answer is kind of always the same. Is no. So that's why the non-traditional market is exploding. Is exploding today because they see the necessity. I see the necessity. I happen to be one of the people that I was told no many times, and I know how it feels. You question yourself, this is my bank. This is the bank that I have my mortgage. This is the bank that I have my savings account, my checking account, and when I need just a small loan, they're turning me down. Not because I have bad credit or not. It's just they're not. Those loans are not in their portfolio. They don't make them. They're not interested in making it also. So this podcast is for, like I said, small business owners that either did not qualify for the traditional business loans with the reason that I just made, or obviously because of the terms of putting anything under the guarantee to ask for these traditional banks, it makes think twice. I mean, what happened if the business doesn't make it? What happened if I cannot pay that loan? They're going to go after my home. And so it makes you think twice to say, and I'm going to risk my family and my home because I want to grow my business. I better stay small and everybody's happy. Well, no, this is not the case right now. The non-traditional lenders that they are out there. We work with about 75 lenders nationwide. We can do loans nationwide, and this podcast, hopefully, it will reach. We will try for this podcast to reach small and medium-sized businesses. And again, the process is simple. We're going to go into that also later on or in future podcasts. Today is the introduction to this type of podcast that we're going to do. It's going to be done every Monday between 2 and 3 p.m. It's going to be live on Facebook and LinkedIn, and it's going to be published in YouTube. Now, if you like to listen to us every week, please subscribe to the podcast on your favorite platform. It can be Spotify, Google Podcasts, or iTunes. And also visit lending brokers, business lending brokers at our website, which is www.giammugnani.com. businesslendingbrokers.com, or my email, my personal email, which is Arturo, Arturo, at businesslendingbrokers.com. So now that we have this introduction, let me talk about, for instance, some of the frequently asked questions that I received from clients that I'm trying to help them with their small business loan or mid-sized business loan. One of the questions is, what documents are needed for clients to apply for a loan, for instance? Well, like I said before, as far as documents, we're looking for a small application, very simple application. And I have one right here, where on the application, basically what we need is a first name, last name, email address, name of the company, name of the business, their mobile home number, business phone number, the type of industry that your business is in, how many years are you in business. Normally, we're looking for sometimes one, sometimes two or more. And obviously, your monthly deposits. And those monthly deposits are being submitted by the client in the form of bank statements to us. And we take the last 6. Obviously, we all understand that some business can be seasonal, and sometimes we got fluctuations between deposits. Not every month is going to have the same amount of money, unless it's a business that actually sells exactly the same thing every month over and over. But we know about the fluctuations. So what we do is very simple. You send us the 6 months bank statements, and the underwriter will actually take the average of the 6 months. In other words, you're going to add the 6 months and divide it by 6. That is the average. And then based on the average, they're going to determine, okay, now we know how much the business is kind of average making every month. And then we're going to look at your personal credit to see if you have any foreclosures or bankruptcies that happened just now, which is perhaps a big no in questions about the decision, because they're looking for some sort of good credit. Not it has to be 800 score or 700 scores. They're looking to determine, are you paying your bills? Is the business paying your bills? We're not looking about exactly the amount of score needed, but they're looking for some sort of a good credit. And obviously, then we need to know what are you using the funds for. Obviously, depending on the nature of the business, they need an explanation as far as, okay, I need these funds to access, hire more employees, or get a new location, purchasing equipment, purchasing vehicles, whatever the case may be. The underwriter would like to know. And again, even though that these banks, these lenders are non-traditional, they have also their chances of risk happen, and they're trying to avoid as much as possible finding themselves in a situation where the borrower has issues paying them back. So even though they're not sometimes, most of the time they don't require guarantees, they want to make sure that they close their teeth and they dot their eyes, and make sure that the borrower has the means of paying them back. And one of the most important things they're looking for is just for those bank statements. They want to know if the business is profitable. They want to know if the business can pay the monthly payment that this loan can have, and pay them off. So basically, that's one of the questions. Another question is, what is the process after I submit an application? Well, basically, an advisor will reach out to you. I can reach out to you, but I will actually submit it to my underwriting department. They will contact you. They will ask you maybe some questions that they may consider important, and then normally, how long does it take to get approved? Well, it can be 24, it can be 48 hours, depending on the underwriter, depending on if they are actually funding that type of business, depending on if you have questions that have not been resolved, depending if you have questions about their bank statements. For instance, if you have non-sufficient funds on the bank statements, they will show on the bank statements. If you got negative balances, doesn't speak well when you got negative balances on your bank statements. So if they have issues on the bank statement that they see like a potential problem, they might need an answer from you. So how fast it gets the loan decided if it's going to be approved or not, it probably will take, it will probably be within a week, which if it compares to the traditional lendings, traditional banks, that sometimes takes 30 days, 60 days. An appraisal needs to be done in your house. They might require all sorts of documents, W-2s, pay stubs, tax returns. And, um, that's the issue with conventional banking. Now, the next question after that is somebody says, okay, how long does it take for a client to receive funding? Well, once you are approved, normally we're trying to make it the same date of approval. Obviously, sometimes because of banking, it depends on when it's approved during the day or at what time got approved. The wire cannot go out the same day. But the process normally compared to the process by any regular bank, it's super fast. The funding is fast. The process itself, it would put the money in your account really at a very fast speed if you compare the non-traditional with the traditional lenders. Now, some of the programs that we are going to discuss, perhaps we can start today. Some of the programs that we have, for instance, let me go over and let me give you some explanations about a couple of programs, and we can do this on future podcasts as well. For instance, a business line of credit. Okay, what is the business line of credit? It's basically funds that are being lent to the business owner that can use as much as, for instance, if you get approved for $250,000, you can actually draw for $10,000-$20,000 because you have something, you got to pay something, you got to pay a vendor or whatever you're buying, and you pay interest based on the amount that you draw. When you pay it back, you can reuse it. So it's kind of a revolving credit line. You can use them all at once. If you have something, obviously you got to buy a building and the building costs $250,000, then you use them all. And then as you pay it back, obviously the money becomes available as well until obviously there is a term for that credit line. And the bank will say, or the lender will say, well, it's a 2-year, it's a 1 year, it's a 3 years, 5 years, whatever it is that you got approved for. And then the credit line needs to be paid by then. Now, again, the amount is related directly related to the funds that are coming into the bank account, your cash flow, your deposits. You can have weekly draws, paybacks, or monthly, depends on what you arrange with the type of lender, what they require. Maybe you can have, normally what they do, and this is for you guys to know as well, it's not like you have to write a check every month. And that's because that's why they use bank statements. Normally what is done in this type of loans is they take your account, your business account, and they do direct withdrawal from the checking account. So now they know that you're making, this deposit. Let's take an example, for instance. Your deposits are an average of $50,000 a month. That's an average. So the lender knows that you're selling or you're providing services, whatever the case is, for $50,000 average per month. So, and let's say that your payment on the loan that they're giving you is, I don't know, $2,000 a month. Okay. So since they know there's money coming in, they set up the account to automatically pay the lender, withdrawn $2,000 every month from your business account. Therefore, you don't have to worry about, I need to make the check. When is it how is my cash flow is going to be affected? Well, they're going to tell you exactly what day of the month this money is going to be taken out, or weekly if you prefer. Obviously, if you pay weekly, the interest it's reduced because you're catching up quickly with the debt and you're paying up quickly as well. But you will know exactly what day of the month or within the range of days from the first to the fifth, or from the fifth to the 20th, whatever the case may be. So you will know that this directly taken out of your business account. That's how these non-traditional lenders work. Okay. For instance, the qualifications, qualify for a business line of credit, they're looking for at least 1 year in business, 1 year in solid business. As far as your credit, again, like I mentioned, they're looking for to see if you are paying your bills. But if they have to look for a score, they're looking for a minimum of 600. Below 600 normally is someone that has a lot of issues with credit, as far as late payments or collections or foreclosures or judgments or bankruptcies, whatever. 600 and above, they're fine. There can be some late, there can be some issues in the credit. They're not that concerned, but they're setting that the roof as far as 600. 600 needs to be the minimum in the FICO score. And obviously, then they're looking at annual sales or monthly deposits. So if you have monthly deposits for $40,000 a month or $50,000 a month, that means that you're making $600,000 a year in sales. Now, with that type of sales, if you look for the $250,000 line of credit, for instance, chances are it's going to be granted. You're showing some solid sales, $40,000 a month, $50,000 a month continuously. Your business is doing good. You personally are paying your debts every month. Obviously, the bank account that your business has to be a business bank account. It cannot be your personal bank account. And that is something that these non-traditional lenders will require. It's a business bank account. So, as you know, folks, the requirements, obviously, for every type of loans, they have little things different from each other, but more or less, we're looking at three major factors. You got a solid business. You've been in business for 1 or 2 years or more. Your industry is an industry that is continue growing. It's not a danger industry. When I say danger, it might be an industry that it creates this big up and downs deposit that sometimes the bank will say, well, this month he deposited $20,000, but next month is only $200. So there are a lot of risks involved that when they have this up and down very dramatically, very wide margins. But if everything is kind of average, if it's 1 month 40, the next one is 30, the next one is 45, the next one is 39, and if they take the average of the last 6 months, you have at least good credit, personal. The lender know that you are committed to your business, that this is your income, your sole income. This is how you feed your family. So there is a lot of things that they take in consideration, and you're not just a number. They're trying to provide a solution for you, a solution for your business, a solution for the situation that you are in, whichever the situation is. And we are here to help. Again, my business is Business Lending Brokers. Like I said, we are located in Tampa. Our website is www.businesslendingbrokers.com. My personal email is arturo@businesslendingbrokers.com. My telephone number, if you want to write this down, it's 813 is the area code, 767-1814. I'm here to help. I cannot say that we help everyone. There's some businesses or situations that we can even though that we have 70 lenders out there ready to lend to businesses, non-traditional funds, but there are cases as well that it cannot be done. It can be done for a few reasons. But again, I'm here to, first of all, when I receive a phone call or I receive an email, I'm trying to find out about the business. I ask a few questions. Not because I'm nosy, it's just questions about, let me see what lender can I use. Let me see which is the perfect match for this business based on the situation. And every situation is different in every business. There might be reasons why you're looking for money. There might be reasons why you need something quickly. There might be reasons that you need to close on something in a week in a bank, even if you have an excellent you are the excellences of the excellences. The bank says I need 30 days, and they say no, it's too late. I needed the money next week. So there's all many differences. There's always something, and I like to find out because when I present a case to the lenders, the underwriters, and I would like to send it with an explanation, and it's my explanation of the scenario, my thoughts on this particular borrower about why they should lend. And the more that I know about your business, the more that I will be able to help you based on the fact that if they ask me for questions, the best person to know about you is actually the person that's trying to help you, which is in this case is me, and I present your case. Also, remember they're gonna also call you as well. They're gonna ask you questions about the business, but the first impression is what it counts. When I send the form to the underwriter, it goes along with my recommendations as far as the reason behind this request of funds. Again, subscribe to this podcast. We're going to go into in the next few podcasts. We're going to really talk about all types of other lending programs. Today was kind of like an introduction, like I said. We also are going to talk about how to grow your business, and also share the latest trends and news. We all know that interest rates are going to the roof. And if we talk about interest rate, for instance, let's talk about that for a few minutes. Yes, you go to the bank, and again, I'm not going to say names. Any bank, any nationwide bank, any credit union, and when they approve you today, either for the mortgage or for the personal loan or whatever the case may be, they're going to give you their best interest rate, which is probably market interest rate. Okay. And I got to tell you something also. The non-traditional lenders don't have that type of interest rate. And I hope it's not new news for you. I mean, we're looking at a non-traditional lender that will not ask for any guarantees, because to get the 6 or the 7 or the 5 or whatever the interest rate is on the market, any bank will require a list of items that they need to be sure that if they lend you, you have something that you can provide to pay back if you financially can't. So yes, they give you a great rate, but also it's a great risk for you to put your assets in line for that loan. Now, your risk minimized when you talk to a non-traditional lender. Your risk minimized because you don't have to put anything on the table, but the risk of the lender goes high because they're lending money and they don't have any guarantees. So yes, the risk goes high for the banks, the interest rate will go high. But, and this is what I always, people ask me, why should I pay higher interest rate for a loan when I can go to the bank? Yes, you can go to the bank anytime. Now, number one, we don't know if the bank is going to lend you money. You think it might be because you have an account with them, like what happened to me and many of you. That is not the reason they're going to lend you money. They're not going to lend you money when they cover all of the underwriting guidelines. They go through a lot of scrutiny as far as your assets and your debts, and and your income and your credit and your taxes and your whatever. They go through everything. And even if you have to take a property, they're going to have to an appraisal. They're going to be underwritten to see if you got any equity in the house. So just in case they need to take the house, they know they have equity, they can actually recover that money. And that process can take 30 days, 45 days, whatever it takes. But you can go and get the best interest rate. But if you're in business, I understand when you're buying a house. You're buying a house, you go into a 30-year mortgage. And this is your home, not your business, your home. So obviously, we're trying to get the best interest rate because we're going to be with this mortgage for 15, 20, 30 years, right? So yeah, we need to go to the bank. Non-traditional lenders will not give you money to buy a house, okay? Because nobody's going to pay that kind of interest when you buy a home. But when you have a business and you have an emergency, and I'm talking emergency like anybody can have an emergency. You need money. Let me give you a scenario. You work with the government in this country, and you produce a product for the government. You got a contract, a valid contract, and let's say that you say shoes to the government. I'm going to say something ridiculous, but you guys are going to get the point. And there is an order for 10,000 shoes. Great. So you send the shoes, and then a few days later, you send your invoice to the government. Well, the government's not going to pay you right away. The government's going to take their sweet time, maybe 60, 90, maybe 6 months. I don't know the type. I don't know. It depends on the contract, right? But it's not going to happen now. It's not going to happen the next day. It's not going to happen the next week after you deliver all those shoes. So what do you do? Now you need to wait for that invoice for them to process, to go to different departments, get all the stamps necessary, and then issue a check that is going to come to you, like I said, 30, 60, 90 days. So what do you do with your payroll? What do you do with your expenses? What do you do with your family, your income? If they're the sole client, you need to have some sort of backup plan because you're going to have to be waiting for 60 days to get paid. So what do you tell the people that work for you? Okay, I'm going to lay everybody off, and then you guys come back in 2 months so we can resume and do another 40,000 shoes. No. You need to have this cash flow that will allow you to wait, that will allow you to perform, that would allow you to even continue making shoes, finding another client, perhaps not just the government. So they give you multiple reasons to grow. Okay, now the interest rate is higher. But the question is, if you don't do that, what do? You don't go and get a loan? So you wait? Obviously, it's not a good business decision. And I'm not talking interest higher that is outrageous. I'm talking 12%, sometimes 11, 12, 13%. That is normal interest rate for a non-traditional loan with no guarantees. But the good part about that is, when you think about it, that interest rate is even better than the 6%, because that interest rate will give you the chance to make more money to offset that interest rate. While if you take the 6% and then you have to wait 60 days, you're losing 60 days of income. So it's been a big, always I encounter borrowers, they when we talk about interest rate, and I said, if you want a solution quickly, where you don't have to put any assets on the line, where you get the funding that you want, the flexibility that you want, and that you can reuse over and over and over, and it's resolved your problem, your business problem right now, there is no reason why going into a traditional bank, because it's not going to happen. Or by the time they make a decision, you just wasted 60 days of your life. And then what happens if the decision is no? What happens? Oh, we're not going to entertain this. Now, after you waited and perhaps spend money in appraisals or whatever, and they said, well, no, underwriter says no, and we cannot do anything. And then what? Now you wasted 60 days. These loans are loans for mid-sized, small-sized businesses that they need cash and kind of now for reasons of growth or reasons of purchasing materials or payroll, whatever the case may be, buying equipment. I mean, if you need to buy a truck because you need another delivery truck, you're gonna wait 60 days to see if you can buy a truck, or you're gonna wait 6 months in order for the government to pay that invoice that you submit in order to buy that truck. You need to resolve the problem now. Yes, the interest is a little higher than normal, but it resolves the problem today. That's why I encourage, uh, especially on business, I would definitely do not encourage people to get a loan of this caliber to buy a home, because that doesn't really make any sense. But what it makes sense financially, what it makes sense for the business, is to access to capital when you need it. That comes into three words. You access capital when needed. When do you need it? A few days and you get it. No having any risk of saying, I'm in the bank, I have an application done, haven't get back to me, and it's 30 days, 60 days. And at the end of the day, it's like, oh, no, we cannot help you. That is not a solid and wise business decision. So, wrapping it up, I think that we can continue in the next podcast, in the next episode. What I can say is there is all sorts of, and then let me give you some so we can actually refer back in the next podcast. For instance, SBA loans, which is government loans, equipment financing. We can talk about business advances, accounts receivable line of credit. This is exactly what I mentioned about the government invoices, that you get an accounts receivable, you get an invoice, you get a piece of paper, and it's just a piece of paper. You need the money. You don't need a piece of paper. You cannot wait 90 days to get paid. You need the money now. Inventory, a line of credit. We have also, there is quite a unique financing for healthcare companies, doctors, dentists, practices with low rates. And obviously there is businesses for veterans as well, specifically for veterans, that these non-traditional lenders may that they have for you guys. Again, just to wrap it up, subscribe to this podcast. A few places: Spotify, Google Podcast, iTunes. If you want to, you can visit our website, businesslendingbrokers.com. There at the website, you can find obviously the type of loans that we can actually, they have the kind of programs available for the small and medium-sized businesses. Or you can actually send me an email with your issue or your questions at Arturo at businesslending.com, businesslendingbrokers.com, I'm sorry. Or you can call me at 813-767-1814. Remember, every Monday from 2 to 3 p.m. weekly, live in Facebook, live in LinkedIn, and is published also in YouTube. And the name of this podcast is the Business Lending Podcast. Thank you so much for being with us. I will see you next week. Thank you.